Hello, my YouTube friends. Happy Tuesday. I hope everybody's doing well. Well, Powell speaks, market collapses, not really a collapse, but goes down a bit. And what do? We look to buy things. So stick around and I'll tell you the things I was buying today. Should be a great video. So, first and foremost, I'm really sorry if the sound quality sucks. I just got a new phone, and unfortunately, the little adapter doesn't fit the new phone. So, I'm going to have to order a new microphone so that you guys can hear me a little bit better, assuming that obviously the sound quality probably sucks. So, I apologize for that. So, Powell speaks. He didn't really say anything that we didn't expect, talked about their two mandates, talked about the 2% target, talked about unemployment getting a little bit weird and tough position to be in. And to be perfectly honest, I think the Fed really is in a tough position. I think they're stuck between seeing unemployment get kind of wonky, where it's not bad, but people are sticking at their jobs because they're scared to go anywhere else because new jobs aren't really opening up. But the economy is still chugging along, and he's not real sure if inflation is being caused by tariffs or inflation is a natural course of things. I think what's going to end up happening is we're going to get more comfortable with inflation running 3%, maybe even 3.5%. It'll give them room to cut the rates a bit. Things will normalize, economy will continue to move along the way it has been, which is meaning people are struggling, nobody likes the inflation, but we're not collapsing either. I hope we don't go into stagflation. Now, what does that mean for the markets? Well, I would say the same thing as yesterday. It still feels bubbly to me, which is why I'm buying on the pullbacks. Until something changes that makes me feel differently, if we have a correction, if things really turn for the worse, then I'll start worrying about, is this going to be a longer term trend? Are we going to stay here for a while? Or are we going to have, I think it was JP Morgan, but I might be quoting incorrectly. It could have been Goldman that was predicting just, 3% returns for the next 5 years because we've gotten ahead of ourselves too much. All of it is a possibility. I know that gives you no help whatsoever, essentially saying the market could go higher, the market could go lower, and the market could go nowhere. As much as I'm half joking, I mean, that is what it is, and there's not much you can do about it. Now, as always, this is not financial advice. Please don't listen to me. I am not a financial advisor. And by all means, you shouldn't take advice on YouTube from anybody talking about finances. You need to seek out a financial advisor, make your own decisions, do your own research, and make what fits your portfolio and your goals. Because even if we were in the exact same positions, we might have different goals for our finances. I talk to my buddy Steve about this stuff all the time. He likes to trade. I like to invest. And we get in these discussions where he doesn't understand why I'll buy what I'll call ancillary stocks that are going to underperform. And we're in similar positions. We go to lunch at least once a week. We talk every day. And he constantly wants to outperform the market. Well, that's not a major concern of mine. Now, similar people, similar investment not strategies, but similar economic, like we're in the same type of position, but he's constantly pushing the envelope, trying to do better and better, and just doesn't understand why I would buy a company like Target or T. Rowe Price or some of these others. Prudential's another one that I try to put in my portfolio just to kind of round it out. And I think of those things as protecting the portfolio and the investments. And one day, some of the portfolio will be higher and other portions will be lower. And on different days, it'll be the opposite. So on big down days, I still tend to have some things that are up on the day. And on big up days, I have some things that have dropped on the day. Now, I don't perform as well as just being in the S&P 500, perhaps, but I'm still okay with that because if there's a real correction down the road, I feel like I have some protection from that. And maybe I'm just kidding myself because in a correction, everything will go down and the drawdown will be what it is. But part of the discussion I had with him today was if there's a real correction, it was a little of what I've said to you guys about what I envision. The way that VOO or SPY works is for every $1,000 that goes into it, it automatically distributes into the S&P 500 stocks as a market weight. So the Mag 7, if they are 35% of the S&P 500, Well, $350 would go into the Mag 7. If we have a real correction that's prolonged and people start selling their VOO and SPY, the same would happen to the downside, which is why I'd be concerned about being overly invested into that portion of the portfolio or into those stocks only simply because I think they're going to outperform. Now, don't hear me the wrong way. I think those companies are fantastic and I'm invested in them as well. They're a big portion of my portfolio, but I have the surrounding ones because if I was trying to outperform, I would really hyper focus on them even more because I think they're great companies that are continuing to outperform in the current environment. It's more that it's very hard to predict when things will change, and they do from time to time. So I'm just not going to make that guess anytime, and I'll stay invested. My set it and forget it account, I'm completely comfortable with what it is in. And if there's a correction, I hope I have some things to balance out the way that I think it would play out as people get out of the VEOOs and the SPY and whatever else. Now, I also think that would create a really good opportunity to pick those things up if that happened, because they'll get oversold just as much as they've been overbought. So if we have a scenario like I was talking about yesterday, where maybe we have a melt up and the stocks go way higher, and then eventually we correct, it's possible they would get oversold significantly to the downside, creating opportunities on both ends. Now, in some ways, I hope that happens just so I can pat myself on the back with the prediction. But I don't know that I really hope for it because overall, that's not a great thing for the economy and people in the world. That's part of why I add companies like Target into my portfolio. I think they're well valued. I think it's a great company. And if we have a correction, yes, they will slow down as well. Earnings could drop, so on and so on. But I think since they have such good earnings, they may not drop quite as far as you might see the Magnificent Seven. Again, my portfolio is weighted towards that stuff as well. So I don't really want it heard the wrong way. I love those companies. They are my favorite. I think we are still in a bull market and I don't fight the trend, but I also round things out and don't go all in on 5 or 6 stocks for a major portion of the portfolio, which is why I always say, don't take my advice. You need to do your own research. It needs to fit you. The other thing is that I talked to him about is his investment objective changes based on the stock price. When I am buying Amazon, it's because I think they're a great company. As long as we're overvalued and undervalued a reasonable amount, now I don't know how to explain what a reasonable amount is. Nothing changes in my mind on that stuff. Unless something happens fundamentally where I no longer like the company, I'm not too sensitive to the price fluctuations of Amazon. It doesn't bother me if they're down a few dollars today, or even if they're down 10%, 20%, as long as things are moving along and the earnings reports are good and the information coming out when they do their quarterly reports sounds good. Like, I'm fine with it. You're going to have fluctuations, things are going to go up and down, because my ultimate objective is in 10 years, I expect them to be doing better and I will have done well by owning that stock. Not how I'm going to do over the next 3 months or 6 months. So I know I promised I would talk about it. What did I buy today? I also bought it yesterday and I bought a little before. I've been buying Oracle ever since their report. And I know the stock has already shot up significantly and I missed a good portion of the move. But that forward guidance was really incredible. And I feel like it's an NVIDIA moment that while it looks expensive up here, if what they said is true, like the earnings didn't blow things away. It's more that the guidance going forward and the contracts they're putting in place in terms of AI and their integration into that with all of the data centers being built, that they are going to make a ton of money going forward. So at the current moment, the PE looks very high, but the growth projections over the next 5 years are incredible, which I think creates a really good opportunity for Oracle. And I think that you're going to see it bounce around and get pretty volatile, But what I'm hoping is that we still see some explosive growth in the company valuation along with those earnings. As those quarterly reports come in, if they match what they were preparing people for, I really expect the company to do very well over the next few years. And again, that could change. It's in my trading account. I did not put it in my set it and forget it account because I want to keep an eye on it. I am using puts at different price points to average into it if the stock falls, but I also bought some shares so that I'm long it as well. Now, I guess we'll see. We'll see what happens at the next quarter. We'll see how it bounces around here until then. But I really think if the next quarter and the following one are as strong as they're hoping they will be, and if the guidance continues that way, I'm hoping to see the thing up 100% over the next 2 to 3 years. So I hope to be patient and I hope to stick with it. What do you guys think of Oracle? Or is it something you even pay attention to? Do you primarily look at dividend stocks? That was one of the things we were talking about today. While I like dividends, I don't know that I seek out dividends the way that some do. I'm happy to accept them. I'm happy when I get them, but I'm much more concerned with how a company is doing and how I expect them to grow for the most part. I like them in the companies that round out the portfolio, but like Verizon, it's nice to get that dividend, but I don't really see the stock doing that well. It's just one of those rounding out companies that I think no matter what goes on in the world, they're probably going to have a decent amount of subscribers. People are going to continue to use their phones, and those earnings should be pretty stable. They have a good amount of debt to offset some of it, so I just don't see the stock rocketing higher. I don't see them gaining tons of market share from this company or this one taking it. I think that T-Mobile, AT&T, and Verizon are pretty well established with the client base they have, and they'll gain some and they'll lose some, but it's probably pretty predictable. Again, a rounding out type of company, but not one that I expect to beat the S&P unless you're extremely lucky with it. I have enjoyed selling options with them because I think that helps to push your return on companies like that. I had trouble this week because the volatility seemed to fall, but similar to Conagra, what I notice is, so I am down about $1,000 on my Conagra position. But I added up the options that had expired as of last week, and I made over $500 in the options that I sold. This is why I like the options trading on some of these stocks that have low volatility, that it helps offset the losses as the stock falls. And as the stock goes higher, well, I'll get taken on some shares. I'll make a little bit on the profit of the stock move, and I'm still collecting some premium. So I hope to outperform what I bought it for, which is the dividend. Anyway, let me know what you think about Oracle. Let me know what you guys think about the markets. Do you feel like we're getting into this bubble phase where it could really explode and then correct? And do you see it the same way I do, that maybe we have about 2.5 years left until administrations change? Anyway, as always, if you could do me a favor and hit that thumbs up button, well, no, hit that subscribe button, smash that thumbs up button. I think I had that all wrong. Make some comments in the comment section. You have no idea how much that helps the YouTube algorithm and how much I appreciate it. Have a great Tuesday. I'm going to go back to watching the markets. Plus, I got that noise going now. And I'm going to do some editing and get this posted. Have a good day, and I'll talk to you tomorrow or the next day.